The gap area tested right on cue, but can Nifty hold its crucial rising trendline support, or are we heading deeper down? Let's look at what the charts are telling us. Hello everyone, I'm Kunal Shah, AVP Alternate Research at Mirae Asset Sharekhan, and welcome to this week's Market Pulse, where we break down the key technicals and derivative developments in the market. Stay tuned till the end to find out which pharma and consumption stocks are flashing strong bullish setups and positive price action on the charts this week. On the weekly time frame, as we mentioned earlier, if Nifty broke below 24,000, it would test the gap area of 23,650 on the downside, a target that was successfully achieved this week. Nifty has taken support at the rising trend line of the low it made in April 2026, which is placed at 23,600. The index is currently stuck right between its 20 weekly moving average and the 40 weekly moving average and needs to break about 24,200 to resume the uptrend toward 24,750. Shifting to the daily chart, Nifty is trading just below its short-term moving averages with solid support at 23,600, which marks the 61.8% Fibonacci retracement of the previous rally starting from 23,070. A break below this level will lead to further selling pressure towards 23,300 and 23,100. The chart indicates that the index must hold this 23,600 support to continue its up move towards 24,700 and 25,000 mark on the upside. Furthermore, a decisive breakout above 24,200 will trigger short covering moves on the upside towards the 200-day EMA, which is placed at 24,800. Digging into the technicals and the derivative observations on the daily chart, the 20-day EMA is placed at 24,106 and the 40-day EMA is placed at 23,980. The Nifty put call ratio is at 0.93. Looking closely at the open interest distribution, the highest call writers are at the 24,000 strike price and the highest put writers are also at the 24,000 strike price. On the sectorial front, selective spaces are displaying strong relative strength. Nifty Pharma showing notable strength with Cipla and Biocon looking bullish on the charts. Nifty Consumption also displaying positive price action with Asian Paints and Eternal showing strong momentum. To summarize, on the weekly chart, Nifty has achieved the gap area target of 23,650 after breaking 24,000, took support at the April 2026 rising trend line at 23,600 and is stuck between the 20 and the 40 weekly moving average. It needs to break about 24,200 for targets of 24,750 on the upside. On the daily chart, Nifty is trading below the short-term moving averages and the support is placed at 23,600, which is 61.8% Fibonacci retracement of the 23,070 rally. Holding this support can push it toward 24,700, 25,000 mark, while a break risk a slide below 23,300, 23,100 mark. A decisive breakout past 24,200 could spark short covering move towards the 200-day EMA placed at 24,800. Top sectorial pick will be pharma and the consumption theme standing out this week, backed by Cipla, Biocon, Asian Paints, and Eternal. That's it for the weekly market pulse. Will the Nifty hold 23,600 trendline support successfully, defend against further selling pressure, or will the index break about 24,200 to trigger a sharp short covering move towards 24,800 on the upside? Drop your comments and thoughts below. To access our video and research reports in real time, join our WhatsApp channel today. The link is in the description. Explore research calls and detailed reports across equities, F&O, commodities, ETF, and more. Visit research.sharekhan.com to kickstart your wealth creation journey backed by a research expert. Thank you for watching. Trade wisely and stay tuned for more updates from Mirae Asset Sharekhan.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.